Yes, sir. Good evening,
Okay,
sir.
good evening. You were on mute.
So actually my mic was not getting on. I don't know what was the reason. I'm just taking that away.
No problem. Okay, so the new syllabus is out and the new concepts have started. So for September 2025, this standard is actually examinable. So this is a very important standard and it is actually impacting not just one part of the syllabus, but also it could impact multiple parts of its syllabus in a small way.
Okay.
So because of that, this becomes a very important part of our concept. Sorry, very important part of our examination because it can be examined. And in the past, whenever ACC have introduced a new syllabus, they have examined in frequently in multiple attempts, like in September, December, March, etc. Sustainability reporting also had the same impact. And this is
Okay.
something that's a new standard that's actually launched in September.
Okay.
And it is actually changing the way we are presenting the information, specifically in statement of profit or loss. No specific changes to financial position, but
Okay,
the
sir.
way the things have been presented in statement of profit or loss have actually gone through a drastical change, which is a change for good, which will help us to uh, give a better clarity of the information and helps the users to take decisions in a much more cleaner and better way. So
Okay.
today we are going to discuss in detail about this IFRS 18 presentation and disclosure in financial statements and what the change has actually occurred. Okay,
Okay, sir.
right. So let me just.
Sir,
Okay.
have other standards are also been some exemptions or
No,
some
not
additions.
not not much. There is something called as integrated reporting, which is not there anymore. So which you don't have to learn integrated reporting. You don't have to learn integrated reporting. Integrated reporting has been removed from the syllabus. Only sustainability reporting, narrative reporting will have to study.
Okay, sir.
Okay. Other than that, there are small changes which is not much, which will automatically will get used to. Okay, in our syllabus. Okay, so we are going to talk about IFRS 18. Okay. Now, before we talk in detail about IFRS 18, or before we go ahead and start about IFRS 18, um, I would like to, very briefly talk about the important aspects of financial reporting, right? So the important aspects or the steps for the financial reporting, which are called as the four main important core aspects. Okay. So if you take any transaction, right, any transaction that we incur in an entity, okay, all these transactions, right, goes through the journal system first, correct? So journal entry is called as the book of the initial entry or the prime entry, where the entry gets recognized, the transaction gets recognized in your system, isn't it? And this is where, right, we recognize and measure the transaction which has incurred. From here, the next, it goes to the ledger accounts, okay, where these journals are summarized in each accounting accounts, right? And this ledger is then further summarized as a list, which is called as a trial balance. Clear? Which is the third step. Okay.
Okay.
From this trial balance is where the accounts get splitted into two main statements, which is called as statement of profit or loss,
Loss and statement of financial position.
financial position. The statement of profit or loss shows the performance over the period. Statement of financial position shows the position of the entity
At a particular point of
at a
time.
specific date. Okay?
Yes, sir.
Yeah. Yeah. Now, what has changed is that whatever right, which is from the transaction to the recognition and measurement where the journal entry post, there has been no changes because these goes through our normal regular standards IFRS, right? Which goes
Okay.
through multiple IFRSs. Like for example, let us say you entered into a transaction where you sold a product to someone. You recognize the transaction based upon IFRS 15. Am I right?
Yes, sir.
Right? So that
Yes, sir.
has
Yes.
not changed. What has changed is from the ledger, from the journal, it goes to the ledger. From the ledger, it goes to the trial balance. And from the trial balance, it gets presented in the financial statement. And that has undergone a change where
Oh,
how you present these accounts in the financial statement, that has undergone a change. And the major change has happened in statement of profit or loss. Clear?
okay, sir.
Earlier, it was IAS 1 where IAS 1 states or mentions how you need to present these accounts into the financial statement. Now it is called as IFRS 18. Okay,
Oh, okay.
right? Have you understood this? This is the entire framework of the accounting. The transaction from where it goes, the transaction, any transaction that we incur on a daily basis, that undergoes to the steps of journal, ledger, trial balance, and then to the statements. What has happened or the change has happened is in these statements presentation and not nothing much on these specific IFRS, how you recognize or measure your transactions, that has not undergone a change. So majorly in IFRS 18 we are talking about how do we present these accounts in the financial statement is what the transaction is what the change that has occurred. Okay,
Okay.
right? Now whenever you study an IFRS, okay, whenever you study any IFRS standards or any IAS standards, there are four aspects to the IAS standards that you discuss about, or four or five IAS aspects that you discuss about, which is called as first one is recognition and reporting, right? Which means how this item, how this item should be accounted or reported in financial statements. So, to give you an example, when you purchase an asset, whether that asset is a PPE, you recognize is that whether that item is an asset, then you recognize it as an asset. And if that item is used for business purposes, then you recognize it as a PPE. If you use it for investment purposes, for a long-term appreciation of your wealth, then you classify it as an investment property. Correct? So similarly, all the transactions that you incur, according to each of the standard, we need to first recognize them by identifying the purpose of the transaction. Okay?
Okay.
By the purpose of the transaction. So to give you an example, let us say we bought a building. Now, if the building is used for business purpose, then it will be recognized as a PPE, which will go under IAS 16. If the building is used for investment purpose, correct? It will be considered as an investment property under IAS 40, correct? And
Okay.
these standards would recognize that or mention that, okay, you need to put it under the property, plant, and equipment or the investment property is what they are talking about. Okay.
Okay, sir.
The second aspect, which is called as an initial measurement, like at what value what value the item should be recorded. What value the item should be recorded, right? So if let's say I purchased, okay, I purchased an asset, right? A machinery. Let's assume that I purchased a machinery, okay,
Okay.
right? With a cost of $10,000, with a transport cost of $1,000, and with a training fees of 500, right? Total is 11,500, and the journal entry would be debit, property, plant, and equipment, credit,
Credit your
cash,
bank.
right? It will be 11,500, 11,500. In here, there is an issue. The issue is that your recognition is correct. Why? Because you have recognized this asset as a PPE, isn't it? Property,
Okay.
plant, and equipment, because it is used for business purpose. So you recognize this asset as a PPE, which seems to be correct, but the measurement seems to be wrong. The amount seems to be wrong. Correct? Why? Because within this amount is shown or included a training fees of
500.
okay,
Okay,
which
sir.
should not be capitalized. Correct? So which means there was an incorrect measurement. Incorrect measurement of the cost, isn't it?
So
Right?
this
So
training cost of 500, it was initially also we don't take it into
no,
consideration.
no. Training of employees of entities, sorry, employees cannot be considered as a capitalizable asset,
Uh,
capitalizable expense.
right, that's what I'm saying. It's not the effect of the change in changes.
No, it's
It's
not the effect. I'm just trying to explain. I'm not talking about the change anymore. I'm not
okay,
talking about the change yet. I'm just trying to explain to you the concept of accounting,
okay, yes, sir.
this concept of a standard, right? So the debit property, plant, and equipment should be 11,000. Debit expense, which will be 500, and credit
Credit
cash
card.
will be
11.
11,500. So this should have been the correct treatment of accounting. Clear?
Okay, sir.
Right? The next we talk about is subsequent measurement. Okay. In subsequent measurement, we can recognize this PP either into two model. One is a cost model, which is your cost minus accumulated depreciation,
Depreciation,
or you can recognize it under
revaluation model.
revaluation model, which is nothing but
The
your
fair
revalued amount minus carrying amount, which will equal to your revaluation
surplus or
surplus. And further, the revalued amount will go for a depreciation,
depreciation.
which will further take you to the carrying amount, right? So this
Yes,
model is a subsequent measurement. Like that, every transaction for each of the standard, there is initial measurement and a subsequent measurement.
yes, sir.
Okay.
Yes.
Finally, the fourth one is where the standard goes and talks about the presentation
Prescription
and disclosure,
disclosures.
right? So it says that the property, plant, and equipment should be presented within, okay, non-current asset, correct? Because it is a tangible asset, right?
Yes, sir.
And within disclosure, you need to disclose about the carrying amount, the depreciation, right? The movement of the depreciation, the carrying amount, the useful
Useful
life,
life.
the method of depreciation,
That
etc.
method of
All of these, minimum disclosure requirements are there. Correct? Now,
Yes, sir.
these presentation and disclosure is where the guidance also comes from IFRS 18, where
Okay.
IFRS 18 gives general guidance on how items or how the transactions should be presented under the financial statements.
Okay, sir.
Okay, whether it should be current versus non-current, whether it should be how do you de-recognize, correct? Whether it should be under the presentation, under the disclosure, what are the aspects? All these guidance are prepared from the IFRS 18, and each of the IFRS gives specific guidance to that particular transaction. Okay, so IFRS 18 gives general guidance on the presentation, okay, which gives general guidance for the presentation, correct? Understood?
Yes, sir. Yes, sir.
Which are taken by, right, or adopted by each IFRS standards to give specific to give specific guidance. Okay?
Okay, sir.
Okay? Clear?
Yes, sir. Yes, sir.
So this is what we have to learn because earlier it was under IAS 1, now it has under IFRS
I
18.
okay, sir.
Okay? Is it clear now?
Yes, sir. Yes.
Right. So IFRS 18 has replaced, okay, IFRS 18 has replaced, um, just a second, yeah. IFRS 18 has replaced the IAS 1 presentation of the financial statements, and its effective period is beginning or on or after 1st January 2027. However, entity standard allows an early adoption. So it is mandatory from 1st January 2027 onwards, on or after. However, if an entity wants to prepare its financial statements using IFRS 18 for the year ended 31st December, 31st December, okay,
Okay.
31st December 2026, they can do that. Clear?
Okay, sir.
Right? So that's what the standard says. Okay. Yeah. Sorry. Can you see my screen, right? Okay. Now, what IFRS 18 mentions or gives is that it sets out a requirement for the presentation and disclosure of information in the financial statement, which which helps to ensure they provide relevant information that faithfully represents an entity's assets, liabilities, equity, and expenses. Now, if you think about financial statements, if you think about the financial statement, what is the purpose of financial statement? To give users information, am I right? About the performance of the company and about the position of the company. Am I right?
Yes, sir.
That's what financial statements are doing. They're just giving us information about the performance and the position. Now, just imagine, okay, just imagine, right? You are not an accounting student, or you don't know ACC, or you have not learned chartered accountancy course, or you don't know anything about accounts, right? What if, okay, what if you are given a financial statement? Okay, what if you are given a financial statement, which could be like, let me just show you this. Yeah. which is, you know, something like this, right? Where you are given the revenue, correct? You are given the revenue, cost of sales, distribution cost, finance cost, share profit of associate, right? And then, you have given the profit before tax, you have given the profit from continuing operations. All these informations are clustered together and given, right? Like this, correct? Right? Now, the problem is, okay, what if, what if in this clustered format or in this, you know, in this format, what if, let us assume, okay, let us assume, let me give you an example. Yeah. So if you look at here, uh, yeah, they have combined, right? In this example, they have combined administration expenses, right? They have combined other expenses, they have combined distribution expenses. Am I right?
Yes, sir.
And within these expenses, correct? What if, right? There are so much of information which are present, isn't it? So what if, let's assume that in these expenses, we have distribution expenses, we have something which is expenses, we have something which is in relation to the depreciation of the building, we have closing inventory. What if, let's say, an entity made an investment, okay? What if an entity made an investment, okay? Entity made an investment, right? Let's say in shares, okay? In
Okay.
another company and generated around $10,000 worth of income. Okay, 10,000 worth of income. Now, within your admin expenses, okay, I'm just giving a random example, okay? If your total admin expenses is 20,000 and you have clubbed the investment income, okay, and shown as 10,000, so your admin expenses is going down. Am I right?
Yes, sir.
Correct? Right. So, second aspect is that entity would have generated lot of incomes. Correct? Let us assume that entity has something called as an other income category. Okay. And within other income, right, you have shown gain or loss on sale of property, plant, and equipment. You have shown investment income. Okay. It is 10,000. Here, 5,000. And here, you have also shown finance income of 15,000. So the total amount is how much? 30,000. Am I right?
Oh, yes, sir.
Now, within the statement of profit or loss, okay, they have recognized revenue minus cost of sales. They show the gross profit minus plus any other income, correct?
Yes, sir.
Right? Now they have shown 30,000. Okay, correct? Then they show minus admin expenses. Okay, so let us assume we'll give some numbers to it. Okay, let's assume that the revenue is 100,000, cost of sales is 70,000, right? So gross
Okay.
profit is 30,000. You have other income 30,000. Your admin expenses was 10,000 minus your finance cost was 5,000. So your total net profit is 30,000, 60,000,
15, 60,
60,
45.
50,000 and 45,000. Correct?
Yes, sir.
Which is your profit before tax. Now, in this, there are little bit of problems. What are the problems? What if the investment income we generated, which is 5,000, is one off? Okay. What if this sale is also one off, which means that it doesn't occur frequently? Okay. And here they have shown the finance income as well as 15,000, which means the entity is actually generating. more money or equal money from their other income rather than from their operative category, isn't it? Because in your operation includes 30,000 gross profit and your 10,000 of operation expenses, correct? So
Okay.
technically, if you reduce these two, you are generating only how much money? 20,000.
20,
But from other income, you are generating how much? 30,000.
30.
So there is an ambiguity or there is a confusion whether the entities' daily operations are in fact profitable or not. Am I right?
Okay.
Right? Correct, right? Right? Are the
Yes, sir.
entities' daily operations profitable? Like for that, we need to do a lot of adjustments into these financial statements, right? We need to adjust the financial statements. Am I right?
Yes, sir.
Which is leading again further to a lot of confusions, right? Because when we want to adjust, do you think that every shareholder or every stakeholder who is interested or who's a user in who has the interest to kind of invest in the company, do you really think that they will go for an adjustment? No, right? Hello,
Yes, sir. Yes, sir.
they won't. So that leads to a lot of confusion, and hence, right? Uh, they have brought a major change to the standard. I will also explain to you the reason as well. Now, if you look at the another aspect, is I'm just going to show you the entities statement of cash flows. Okay.
Okay.
Now, this is an entity statement of cash flows. When you compare the statement of P&L and statement of cash flows, in statement of profit or loss, you have the entity's profit or loss, which includes cash item as well as non-cash item. Am I right?
Yes, sir.
Whereas in statement of cash flows, it includes only the cash they have used or generated over the period in specific to various activity the entity operates in. Am I right?
Yes, sir.
So in cash flow statement, they have divided the entity's activities into three categories: operating, financing, as well as investing. This gives us a better clear picture whether the entity is actually profitable or whether the entity is actually generating money out of their operating activity. Am I right? So when the entity says that, okay, I have generated around 1,800 and 1,380 million of cash from my operations, my day-to-day operations are profitable. That's what it means, isn't it? I'm making money out of my operations. Am I right?
Yes, sir.
Even though if my total cash and cash equivalent is only 230 million, that is could be because I have used the cash that I have generated to do what? To do certain kind of investments. Am I right?
Yes, sir.
Right. So why investing activity is low? So when we look at the cash flow statement, we are getting a clear picture of based upon the entity's performance in various categories of activity they perform, how the entity is actually performing in each of the category.
Oh,
Whereas you take the profit or loss and you compare it with the cash flow statement, it right now with the current presentation, it is non-comparable, isn't it? Because
okay.
you won't be able to identify what are the activities by looking at the line items in P&L, whether the entity is actually profitable within their day-to-day operations or not without doing any adjustments, because they are aggregated together. Lot of transactions or lot of accounts are aggregated together to present in the financial statements or to present in the profit or loss, correct? Because over here
Okay.
as well, all these expenses, they all go for something called as aggregation, because in admin expenses could include impairment expense, depreciation expense, lot of other expenditure, amortization, etc., which are aggregated with the discretion of the entity. Like it's up to the discretion of the entity how they want to aggregate. Correct? So a lot of
Okay.
discretion of the entity are given, which leads to uh, 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 not able, unable to take an informed decision just by looking at the profit or loss, or come to a conclusion about the entity's performance using the profit or loss, because it has to go through a lot of adjustments or changes to identify whether the entity's daily operations are profitable or not. Am I
Okay, sir.
clear?
Yes.
Right. Now, this ensure, right, or to help um, this particular aspect, or to ensure that the entity has a better operations or better presentation. um, IFRS standards have launched a new standard. The IASB board has launched a new standard, IFRS 18. And in IFRS 18, the major change has gone through a format change for your statement of profit or loss. In statement of profit or loss, right now, you have to classify all the income and expenses into primary five categories. Okay.
Okay.
There are newly defined operating profit plus other subtotals which are presented on the face of the statement of profit or loss. The presentation of operating expenses should be either by function, by nature, or on a mixed basis on the face of the statement of profit or loss. Okay,
Okay, sir.
right? And also note that all the classification of income and expenses depends on the main business activities. Therefore, it may depend upon various industries. Clear?
Yes, sir.
So what has changed? So as an illustrative example, the major change has happened that all the incomes and expenses have to be divided into primary three categories, which are new in place, are operating, investing, and financing. And after each of the category is completed, you have to create a new subtotal. After your operating activity is completed, you have to show an operating profit or loss. Okay.
Okay, sir.
And after the investing activity, you have to show profit or loss before finance and income tax. And after your financing activity is completed, you have to show the profit or loss before income tax expense. And once you have reduced your income tax expense, this remains the same as per the IAS 1, where you used to show profit before tax minus income tax, and then you used to show the profit or loss from continuing operations. And you used to add the profit from or loss from the discontinuing operations to show the net profit or loss for the entity. Understood? So two new subtotals have come into picture and three new categories have come into the picture. And as per the new requirement, the profit or loss have to be segregated into these five categories.
Okay, sir.
Okay. What are the positives? The positives is that this statement is easily comparable to the statement that you prepare in your financial statement is a cash flow statement, right? Or you can easily identify or compare, okay, I am generating so much of operating profit or loss, which means in cash flow statement, I'm generating X amount of cash flow from my operating profit or loss, which means there are few profits or few losses which are non-cash item, easily comparable. Am I right?
Okay, sir.
Right. Second, investing activity. I have spent so much of money into my investments, out of which I am generating X amount of investing income or X amount of investing expenditure, which are shown within my investing activity. Similarly, I have taken X amount of loan. It clearly shows what are the money that I'm spent on my financial liabilities. What are my interest expenses are clearly segregated. What are my commitments? What are my monthly or annual interest commitments that I have to bear within my financing activity? That is also very clearly articulated in your financial statement, which helps the users to take a decision much easily and much effectively. Let's say that a company is not generating enough amount of operating profit or loss, but majority of their profit is from investing activity, right? And they have a huge finance expenditure, because of which the entity is unable to generate enough profits. A user can take a decision to discuss with the board of directors or to exit from the company, that the entity does not have a foreseeable future, like they are not going to have a much better wealth aggregation. So hence it is better to stay away from that entity. Or the board of directors can look into this and say that, you know what, over the last year we have not done a lot of business, but rather we have made money through the investments of us, or we are losing a lot of money through our finance commitments. So we need to change our strategy or change our business model. That kind of decision making capability and management performance measures will also improve because of this new presentation methodology of IFRS 18.
Okay, sir.
Right. Right. So because you are very clearly articulating, or you are very clearly showing what is your operating profit or loss, operating profit or operating loss, which helps us to understand whether the entity's performance from the day-to-day operations. And you are required to very clearly segregate between them. Any operating items are the items which you spent on a day-to-day basis. Correct? The selling and functioning of your business activity, the expenditure you incur to function your business activity. For example, the rent that you pay for your building is an operating activity. Correct? The transport cost is an operating activity. Correct? The depreciation that you incur on your property, plant, and equipment, or your machinery, or your car, are your operating activity. Correct? However, whatever the interest income you generate out of your investments that you have made is not an operating activity, but an investing activity. The fair value gain you recognize on your investment properties is not an operating activity, but rather your investing activity. Correct? Am I clear?
Okay, sir. Yes, sir. Yes,
Right.
sir.
And the loans, the interest expense out of the loans that you have generated to to construct a new building, or to fund your working capital, right? The loans that you have taken and the interest amount you are bearing is a part of your financing activity. Correct? So that segregation based upon the purpose, right? The purpose of the transaction. What is the purpose of the transaction? Whether the purpose is to support your daily operation, whether the purpose is to generate additional investing, or whether your purpose is to fund or finance your operation. Accordingly, you have to segregate your transactions into those. So if it is for your day-to-day operations, goes to the operating activity. If it's generation out of your investment income or your investment expenditure, then it goes to your investing activity. If it is for your day-to-day operations of your finance, to fund your finance, then it goes to the financing activity. Is it clear?
Okay. Okay. Okay.
Right? Any questions?
No.
Okay. So, right. Um, Before I take a small 5 minutes break, I'll just quickly discuss about the classifying of income into these five categories. As you know, the five categories are operating
Okay.
activity, which talks
Investing.
about the income and expenses from the main business activity, plus any income and expenses which are not classified under any other categories are called as operating activity. So, to give you an
Okay.
example, um, amortization expenses of your intangible asset, operating activity. Um, if you have made a transportation cost, operating activity. If you have salaried employees, operating activity. All these are examples of operating activity. Income and expenses that you generate Income and expenses that you generate from the investments that generate a return individually or largely independent of your main business are called as your investing activity. Let us say I am a manufacturing company. Okay. I manufacture machines. I manufacture big machines and sell it. Okay. Right.
Okay.
Now, because I'm manufacturing so much machines, right, I generated a lot of profit, which means I have a lot of retained earnings. Let's say I have around $10 million in my retained earnings. Okay. And because
Okay.
of that, I have a large cash surplus. Okay. I assume I have a large cash surplus of $5 million. I'm just giving an example. Okay. Now, what did I do? If you have 1 lakh rupees, what will you do with that 1 lakh rupees? Will you keep it as a physical cash in your home, or will you go and invest it in a bank, put it in a deposit, or maybe invest in
Investment.
share?
Investment.
Investment, right? So similarly, entities also will deposit in a bank, correct?
Okay.
Am I right? So because they are depositing in a bank, they will generate an interest of how much? Let's assume 5%. So that this interest income is what activity? Investing activity.
Investment.
Why? Because the $5 million cash they surplus they had, right? And the machines, what they do, they manufacture machines. Am I right?
Oh, yes,
So
sir.
whatever their main business activity is not to go and give or not to go and invest in various companies, or their main business activity is not to give loans to people. Am I right?
Okay.
Correct? Their main business activity is manufacturing of machines, then selling them. And they had
Okay, sir.
huge cash surplus. What did they do with that? They went and invested in a deposit, and they are generating income. Correct? So their main business activity is independent of the investment they have made. Am I right?
Okay, sir.
So hence that income is considered as an investing activity.
Okay.
Okay. The next
Okay.
one is financing activity. Income and expenses relating to obtaining finance to fund the main business activities or investing activities. Okay. Any income and expenses relating to obtain finance to fund the main business activities or your investing activities are considered under the financing activities. Let us take the same manufacturer, right? Took a loan to construct a new factory. Okay. They took a loan of $10 million to construct a factory. Any loan that you take will bear an interest. Now the interest is 8%. So the $800,000 of interest expense will be in what category? Will be in financing category. Am I right?
Okay, sir.
Okay. Am I right? Any questions?
Yes. No, sir.
Right. Hmm. Income tax is a tax expense or a tax income. It could be a reversal as well. And discontinued operation. As per IFRS 5, we have studied that any assets which are held for sale and discontinued operation, right, will be separately reported as a one single line item apart from your regular or profit or loss from your regular continuing operation. Okay,
Okay, sir.
right? Now, when you are classifying, the standard says that when you are classifying as these categories, you should also consider whether the entity has either or both of the following activity as the main business activity. Example, investment in assets. Example, financing to the customers. For example, through providing loans, right? Such as banks, insurance businesses, or property investors. Then, when you are generating income out of these activities, they are your day-to-day operations. They will be under your operating activity. Okay.
Okay,
They will
sir.
be under your operating activity. I will give you an example. Okay. I will give you an example. Let us assume, okay, let us take two entities. Okay. There is an entity A. Okay. And then there is an entity B. Okay. Entity A,
Okay.
what it does is they are an um, tech company. Let us assume tech company. Okay. Let us assume Apple company. Okay.
Okay.
The entity which is called as entity B, which is a real estate company. Example, have you heard of, I don't know if you have heard of this, Office, or you can also call it as WeWork. Okay. What do they do? Okay. Entity A, you know what they do. Apple company makes softwares, build softwares, or manufacture phones and sell them. Correct? So their main business activity is manufacturing of tech products, okay, or
Okay.
softwares, and sell it and
Okay.
sell them. What does entity B does? Entity B purchases or constructs buildings, okay,
Okay,
and
sir.
sorry, constructs buildings and what do they do? Give it for rentals. Clear?
Okay, sir.
This is their main business activity. Okay.
Okay, sir.
Now let us entity A purchase the building and gave it for rental. Okay. So entity
Okay.
A purchased a building and gave it for rental. So entity's main business activity is what? Right? Entity's main business activity is what? So their main business activity, I'm gonna write it as MBA. Main business activity is tech related, correct? Tech manufacturers. What is the transaction they did? Okay. So entity A business tech manufacturers. Okay.
Okay.
Transaction building purchased, right? And rental, correct? Building purchased and rented it out. Rental to third party. Okay. This is what they
Okay.
did, right? Now, is this their main business activity? Is this their main business activity? Is giving rental is their main business activity? No, no. So, which means any income and expenses you generate out of this, which is right, uh, when you're giving a rental, you generate an income, correct? And to maintain that particular building, you have what? Expenditures, correct?
Okay.
Right. So let's say, for example, Manath, you have a flat, you purchased a flat and you gave a rental it to, you rented it out to someone. What will you
Yeah.
get? You get a rental income, correct?
Rental income.
Second,
Rental income. Investment.
yeah, you invested it in a building. So you had, let's say, $1 million. You purchased a building, okay? Let's say in Delhi, you purchased a building, okay, or a
Mm-hmm.
flat, and then you rented it to someone. So that guy will give you rental income, right?
Yes, sir.
And to maintain that building, you will have to clean it, you have to paint it. If there is some plumbing problem, electricity problem, you have to take care of it. Am I right?
Yes, sir.
Right. So all these expenditures you incur, right? With respect to the income, in respect to the property as well, correct? right?
Yes, sir.
Now you are a tech manufacturing company, right? Let us say
Okay.
Manath is the CEO of this Apple company. Manath is the
Okay.
tech manufacturing company. And just because you wanted to diversify your portfolio, the company purchased the building and rented it out to someone. Okay.
Okay, sir.
Now, whatever income and expenses they generate out of this, is that their main business activity?
No.
No. So, which means the income and expenses will be classified under,
Investment.
yes, investing
Investing activity.
category.
Okay.
Investing category. Look at the same situation. Let us assume the same situation happened with entity B. They also purchased a building. Okay. Purchased a building and rented it out.
It will be a main business activity for this entity.
Correct. Correct. So, entity's main business is a real estate company,
Okay, sir.
right? And the same situation, they purchased the building and rented it to the third party. Is this their main business activity? Yes, indeed, it is. Correct?
Okay.
So, I'll just color change the style to, yeah, okay. Okay. Now, it is their main business activity, and hence, this will be under operating
Category.
category. Okay.
Okay,
Now,
sir.
let us assume both of them purchased a car, purchased, let's say, a vehicle for their business use. Okay. Let us say both of them purchased a commercial vehicle. A tech manufacturer purchased a commercial vehicle to transport their manufactured phones. Okay. Apple purchased a commercial vehicle for manufacturer there to transport their commercial phones. These people also purchased a vehicle to transport their employees. Right. So it is a real estate company, no? So they
Uh,
have to clean the place and all those things. So they said that, okay, you know what? We will purchase a vehicle and we will use it to transport their employees and maintain our business. Okay. So they both purchased a vehicle, purchased a vehicle for business use, for business purpose. Correct? Right?
okay.
Now, for entity A, which is a tech manufacturing company, okay, what did they do? They purchased a vehicle, purchased a vehicle which is for the business purpose. So hence it will be a property,
Operate.
plant, and equipment. Is that their
Okay.
main business activity? Are they in the business of, buying vehicles and selling it? Are they in a
No.
business of buying vehicles and then renting it out? No, right? So which
No.
means it is their whatever expenditure or income they generate will be going under the operating
Okay.
category. Correct? Similarly, entity B also, which is a real estate company, they also purchased a vehicle. Am I right?
Yes, sir.
Which will also be categorized as a property,
PPE.
plant, and equipment. Am I right?
Yes, sir.
Which they are also not into the main business category, and hence it will be their
Operating activity. Operating
operating
activity.
activity. Correct? So for
Okay.
entity A, the building they purchased was an investment property.
Okay.
And for entity B, the building they purchased was a property, plant, and
Equipment.
equipment. Right?
Okay.
So now, according to the activity of the business of the entity, and according to the purpose of which you are buying that asset, the income and expenses relating to that asset will be classified to the various activities. To give you an example, now if the same entity, okay, if the same vehicle that we purchased, okay, take this as an example itself. If the if let's say an entity purchased a vehicle, okay, entity purchased a vehicle, it could be considered as a PPE if they used it for the business. Correct?
Yes, sir.
It will be considered as a PPE, which is used it for a business. It could be considered as an investment property If they used it to earn rentals, correct? Then it could be an investment property, correct?
Okay.
It could be also in inventory. The same vehicle can be inventory. How? If they are in the business of buying and selling of cars, isn't it? In that case, it can be an inventory. Am I right?
Okay,
So,
sir.
if a Apple company buys a vehicle and you're using it in the business, it could be a PPE. If the same Apple company bought the vehicle and they used it as a secondary source of income to generate rentals, it will be an investment property. Correct?
Oh, yes, sir.
Now, let us say Apple company started a new business called as Apple Cars, where they purchased cars and sold the cars. It could be an inventory for them. Correct? So the same transaction is treated in different manner when depending upon two aspects. What is the purpose of the transaction and what is the business activity of the entity, correct? So
Okay.
ultimately, whatever income and expenses you generate out of these assets or liabilities, right? The income and expenditure you generate out of these assets and liabilities, depending upon the purpose, will go either to operating, if it is for your daily operations, to sustain your daily operations. If it will go to your investing, if you are generating investments out of these operations, or it could be of your financing if you had funded, right? Took funding to uh, maintain this operating or investing activity.
Okay, sir.
Okay. Okay. Any questions?
No, sir.
Okay. Okay. So we'll take a short 5 minutes break. Okay. Then we will resume and discuss about in detail about the investing activity and talk about a couple of examples.
Okay, sir.
Okay. Yeah. Hi, Mana. Are you there?
Yes, sir. Yes, sir.
Yeah. Okay. Um, so let's further deep down. I understand what are the various categories that we have to learn. The first category is operating category, right? In operating category, all the income and expenses, okay, all the income and expenses from operating assets, all income and expenses that you generated from operating assets. Example, sale and purchases of goods and services, right? Revenue from sale of goods and services, purchases of your goods and services, depreciation impairment from your property, plant and equipment, amortization impairment, reversal of impairment on your intangible assets, gain or losses on disposal of property, plant and equipment or intangible asset. All these are considered as your operating category. Okay, are considered as your operating category. Income and expenses from liabilities, excluding interest income and expenses, like income and expenses of purchased goods or services, repair cost from consumption of purchased goods or services. Example, repair cost. Current and past service cost of your defined benefit plan. And past service costs from your defined benefit plan are all considered under your operating category. Okay,
Okay, sir. Okay, sir.
right? Now, as we said about an entity, if an entity has, let's say, two divisions, division A and division B, okay, let us assume that an entity has two divisions, division A as well as a division B. Division A entity, let's say, manufactures machines. In division B, let's say that entity has a real estate company where they, you know, generate income by leasing out the real estate. Then whatever income and expenses out of these two divisions will be considered under operating activity, isn't it? Because if an entity has specified main business activities, the operating category would also include such as rental income from investment property or interest income from loans to customer for a bank, right? If they are into those business activities.
Okay.
Understood? Is it clear?
Yes, sir.
Yeah. Now let's talk about investing activity. An investing activity should include income and expenses arising out of entities' non-operating assets, assets which you are not used in your day-to-day business generations, the assets which you have used for some other purpose. Example, investments in associates, joint ventures, and unconsolidated subsidiaries. What are the example of unconsolidated subsidiary? What is an example of an unconsolidated subsidiary? Or when is a subsidiary you don't consolidate? When there are specific regulation, right? When an entity, right? If let's say parent entity purchases a subsidiary and the parent entity itself is a subsidiary of another entity, then S will not be consolidated to P, but rather S will be consolidated to
A.
A. So in P, it will be just a S will be just an investment. If you have purchased a subsidiary for a specific purpose of resell, which means you purchase the subsidiary and you're going to resell it, then you don't need to consolidate, right? If you
Okay.
are in the in the industry or in the business activity of purchasing shares in a company, you are an investment based company. Example, you can say mutual funds. Example, you can say LICs, investment institutional investors, right? Example, you can say companies which what they do, they have enough cash flow, they go and buy various companies and they just hold the companies, that's it. In that case, you don't need to consolidate, you are given exemption to consolidate, right? Because your main business activity is to go and buy shares in these companies. Am I right?
Okay, sir.
So hence, these are considered as your investment activities. cash and cash equivalents. Okay. Cash and cash equivalents. Let's say you are doing a business, right? What do? You generate profits. Profits will get converted into cash, right? You will invest that cash in deposits. Am I right?
Yes, sir.
So what will happen when you invest those deposits, when you invest those funds in your deposits, definitely you will earn interest income out of it. Am I right?
Oh, yes, sir.
So that will become what? That will become your investing activity. Okay.
Okay.
Right. Other non-operating assets such as debt or equity instruments and investment properties. For example, in financial instruments, we would have learned about financial assets. Correct? You have given, you have invested in a bond, or you have given loan to someone, or you have invested in shares of an entity, right? Which are not consolidated, neither they are associates, neither they are joint ventures, which is you are holding only less than 20% of shares, right? Or investment properties. All these will be categorized as non-operating assets. So any income you generate out of these non-operating assets, such as interest, dividends, and rental income, any income and expenses from your initial and subsequent measurement of the assets, including depreciation of investment properties under the cost model or fair value gains, any expenses which are directly attributable to the acquisition or disposal of these assets. Example, transaction cost to purchase the shares of a company, transaction cost to purchase a bond, right? Transaction stamp duty you pay to buy a property. All these will be considered as an investing category.
Okay, sir.
Okay. We will call it
Okay.
as an investing category.
Okay.
Now, there are a few problems, right? Or there are few confusions that could occur. Um, let's talk about that confusions through a few real examples. Okay.
Okay.
Let us assume, let's take one example. Okay. Let us assume that there is an entity. Okay. Let's take an example of Reliance Industries. Okay. I don't want to take Reliance as a parent entity. So I will take a specific, okay. I'll take a Tesco supermarkets. Okay.
Okay.
Right. So it's a supermarket. Okay. This is the entity. Now, this entity has, okay, what they have done is they have purchased a building. Okay. They have purchased a building and, okay, what they have done is they have let it out or rented it to, rented it to another entity. Okay. So third
Okay.
party. So this building will be a non-operating asset because their main business activity is trading by buying
Trading in
shares and
supermarket.
selling it to the retailers. Correct. So they are supermarket. So this income, whatever the rental income that the entity generates, rental income the entity generates will be considered as an
Investing category.
investing category. Correct. Now the same supermarket over the period of time have generated huge cash and they invested it as bank deposits. Okay. So the surplus cash that you have, you will go and deposit, right? And you are generating an interest of 8 percentage per annum. You are generating how much? 8%
8%.
per annum. So that will also be considered under what category?
Investigate category.
Investing category. Clear? Any question?
No, sir.
Correct. Now, let us take another entity. Okay. Okay. Another entity. Uh, okay. This entity, one second. One second. Okay. I'll give you another entity example, which is called as a BlackRock. Okay.
Okay.
Now this is a real example. BlackRock is an investment asset management company. Investment and asset management company.
Okay.
Okay. What does this entity does? Okay. This entity takes investments from customers. Okay. Let's say there will be $100 of investment that the entity takes from the customers. They will give maybe a return of maybe 5% or 20% per annum. They maintain, right? Funds for that. And what do they do is these investments, okay, they go ahead and invest it. Okay. They go ahead and invest it. Okay. This $100 in various shares or bonds of another entity. Clear?
Okay. Okay,
So
sir.
these customer investments for BlackRock will be considered as a capital or an equity or a liability. Whereas the shares that they do are the investments that they generate in the various other organizations. And this investments, right? What happens is that they will get investments, let's say maybe 5% to 20% or 30% from these investments, and they give it to their customers. And the BlackRock would fix a portion of profit. How they make money is maybe profit sharing, or they may have a fee, etc. Understood? That's how they make money. Now, if this entity, okay, which is BlackRock, okay, assumes purchases 10 percentage of shares, okay, in Apple company, correct? They
Okay.
purchase 10% shares of Apple company. What is their main business activity? Isn't it to go and purchase it? Isn't it to go and purchase in these various investments?
Yes, sir.
Am I right?
Yes, sir.
Isn't?
It, it would be the operating
Yes.
category.
Yes. So hence, whatever the income and expenses that they generate, out of this will be considered within operating activity. Am I clear?
Yes, sir.
Okay. Operating activity. Now, if BlackRock might have excess cash surplus, which they have not invested in shares, but rather they put it as deposits in the bank. Correct? Then this will be considered as what? This will be considered as an investing activity, isn't it? If
Yes.
BlackRock had so much surplus of cash, they would have gone and invested in shares, right? But rather, did they do that? No, they kept it as a separate liquid for their liquidity purposes. So hence,
Yes.
that surplus they deposited in bank is considered as an investing activity. Okay? Or they purchased a building and they rented it out. So they purchased a building and they rented it out. That will be considered as a investing activity. Am I right?
Okay, sir.
All right. Right. Similarly, let us assume that there is another example. Another example. Example three. Okay. Another example is an example three. Let's assume you are a bank. Let's assume you are HDFC Bank.
Okay.
Okay. HDFC Bank. HDFC Bank does what? They get deposits. Okay. They get deposits from whom? Customers. Let us assume $100 of deposits. And what do? They give loans, right,
Yes, sir.
to customers. They may
Okay.
not give the entire loan. They might give it maybe to the extent of 80%, because as per the
Okay.
rule, 20% have to be set aside. So these customers from whom they have taken deposits, they have to pay interest, maybe 6%. And the customers to whom they have given loans, they will pay HDFC Bank
Interest.
interest, which is
Okay.
8%. So which means HDFC Bank will make a profit of 8% minus 6%, which is 2%. Understood? This is how they make a profit. Now, if HDFC Bank, okay, if HDFC Bank has a surplus of cash flow, let us assume they have, okay, in the first example, let me give another example, is that let's say HDFC Bank bought a building, okay, HDFC Bank bought a building, all right, because they want to house their employees. So this expenditures will be under the operating activity, isn't it? Because it is a property, plant, and equipment. Am I right?
Yes, sir.
Right. Now let us assume that HDFC Bank, what did they do? They purchased 10% shares in SBI. Assume this. They purchased 10% shares in SBI. Now, why would they do that? Because they had enough money and they made a lot of money through giving loans and etc. And they purchased 10% shares in SBI so that they can generate additional returns, isn't it? Correct?
Yes, sir.
Now, this particular investment, is this their main business activity? Is HDFC Bank
No.
taking customer deposits and investing in various shares? No. Their main business activity, and as per RBI, when HDFC Bank takes loans, deposits from customers, they will have to go and give it as a loan, isn't it? Right. They cannot go and invest in shares, right? But they can buy shares in another company using their own cash flow. Understood? So whatever cash flow they have, whatever money they have, they can go and use it and buy shares in another company, right? For example, like SBI have shares or investment in Yes Bank, correct? Like that they can do. There's nothing wrong, right? But it has to be their surplus cash flows. It has to be their surplus funds which are available for HDFC because they have generated so many profit. They have so much money with them, so they went and invested it. Okay. Now this will be considered as what category? investing category.
Okay.
Correct, right? Right. Now, if at all they will have surplus cash and cash equivalents,
Oh,
am I right?
sir, I got an urgent call. Can you please take a break for 2 minutes?
Yeah, sure.
Hello, sorry, sir.
Hello? Yeah, no issues. Are you free now?
Yes, please.
Yeah. So let us say that, HDFC Bank, when they have been in business for so long, they will also have lot of cash with them, right? They will also have a lot of cash with them.
Okay.
So what will happen? What will happen? Whatever the cash they have, they might go and deposit in a bank, or they might deposit in another bank, right, to generate returns, right? Or they might give it to RBI, correct, to generate returns, etc. Correct? Now, here, there is a choice that is given to HDFC Bank. Why? Because the cash and cash equivalents that they have can be used for their main business activity by giving loans to the customers. Am I right?
Yes, sir.
But they chose an option to invest in as a deposit with another bank, or to invest in their own deposits, or to invest within, let's say, RBI. Correct? So they deposited in RBI, etc. Now here, Standard is giving a choice. They can either show the income, the interest income the HDFC Bank generates out of these deposits. They can either show it under which category? Investing category or operating category as an option. Okay? Is it clear?
Okay, sir. Yes, sir.
So, likewise, we will have to identify the purpose of the non-operating asset and the type of activity, and then take a decision to which category it falls under. So there is a flowchart that is given. There is a flowchart that is given. Income and expenses from assets, non-operating assets and operating assets. Any income and expense you generate from operating assets will directly go to will directly go to okay will directly go to operating category. Correct?
Okay. Yes.
If you have assets which are under non-operating category, if you have assets which are under non-operating category, let's say, for example, you have investments in associates, investments in joint ventures, or investments in unconsolidated subsidiaries. Correct? And you use what method? Equity method of accounting. What is equity method of accounting? The equity of the associate or subsidiary, portion of that will go to the parent. Isn't it? That is called as equity method, right? When you invest, you know how we account for associates, right? When we have an associate, whenever A entity has an associate called as B, whatever the profit, let us assume it is 30%, profit of B 30% will go to A, correct? Whatever the
Okay.
retained earnings, 30% will go to A and it will be shown as cost of investment plus the 30% retained earnings as
Okay, sir.
total. Clear, right?
Yes, sir.
Now, why will an entity will show an equity method of accounting? Because A entity will buy B entity and they would retain that entity for a longer period, right? Why? Because they have no intention to sell the entity. They purchase the entity to have a strategic alliance, right? So, for example, Reliance purchased Hamleys toys, right? Why? Because to have a strategic alliance, correct? Right?
Yes, sir.
Uh, Another example is, let's assume Volkswagen. Let's assume Tata Motors. Tata Motors purchased the Jaguar Motors and Jaguar and Range Rover, right? Why? So that they can capture into a new market. Did Tata Motors purchase Jaguar so that they can resell it at a profit after later? They resell the shares of Jaguar later at a profit? No, right? Right.
Sir,
So
I
then
didn't
when,
understood
yeah,
what you said. Can you repeat?
yeah. So see, any entity, right? Any entity will purchase shares in another entity. So let's say there is an entity A will purchase shares of another entity B. They will have two purpose, either to hold it for long term, correct? And to form an alliance, right? Or for trading purposes and generate money, correct?
Okay.
Now, when you are following for a long term alliance, you will use an equity method of accounting, isn't it? You can use an equity method of accounting as per the IFRS 3 business combinations. If you are using it for trading and business purpose, you will have to use the fair value method, isn't it?
Okay.
As per IFRS 9. Am I right?
Yes.
Right. So, why will you use equity method? See, if you are having an intention, you are buying a company and you might sell it after later, you would have done it for business, for gaining money, isn't it? To give an example, mutual funds. Why will mutual funds go and buy shares of various companies? Main business is to resell. Am I right?
Yes, sir. Yes, sir.
Yes, sir. Like, for example, BlackRock. Why would BlackRock go and buy investment in Apple? Main purpose is to resell so that Apple, after grows, their share value grows. I can sell it off. Am I right?
Yes, sir.
Right. But there could be cases where an entity will buy another entity so that they can form an alliance. Example, Tata Motors purchased the Land Rover company or the Range Rover or the Jaguar company so that they can form an alliance, isn't it?
Okay.
Right. Did they buy the Jaguar to so that okay, you know what, Jaguar shares will increase after some time, so I will sell it off. Did they do that? No, right?
Okay, right.
Right. So because an entity which Tata Motors, which is in the business of manufacturing and selling vehicles, they purchased shares in another entity. Was their business activity to purchase and resell shares? No.
Okay, sir.
Right. So their main purpose is to have a long-term alliance. So they might use an equity method of accounting. So if in your entity you purchase shares in another entity and you use equity method of accounting, and any gain or loss or any profits from associates, profits from joint ventures should follow which category? Investing category. Okay?
Okay, sir.
Investing category. Did you understand this?
Yes, sir.
If you are using other than equity method, what method you have? Fair value method as per IFRS 9. Correct? You have to ask a question. What is that question? Does the entity invest in these assets as a main business activity? Okay, you purchased 70%. Let's say assume BlackRock purchased 70% in Microsoft. BlackRock is what company? What is their main business activity? Buying and selling of shares in another company. Am I right?
Okay.
Am I right?
Okay.
You didn't understand that?
Understood, sir.
Yeah. So if BlackRock purchased 70% shares in Microsoft, so BlackRock purchased 70% shares in Microsoft, okay? BlackRock's main business activity is to buy shares and sell shares. Am I right? So the reason why they would have purchased it because they wanted to generate returns out of this. So that will fall under their operating category because that's how they make money. That's how BlackRock makes money. They buy shares and they sell shares at a higher. They buy shares at a lower price. They sell shares at a higher price. Am I right?
Oh, yes, sir.
Right. But if let's say Tata Motors, let's say not Tata Motors, let's assume TCS. Okay. TCS is a Tata Consultancy Services, right? Or let's put the example of Infosys. Okay. Let us assume Infosys purchased 70 percentage in Microsoft. Okay. Let us
Okay.
assume Infosys purchased 70 percentage in Microsoft. Then what will happen? Did the entity purchase Microsoft because they are in the business of buying shares and selling shares? No, right? Infosys is a tech company, correct? They purchased Microsoft because they want to have a strategic alliance, but they are investing or they are using a fair value method. Am I right? Okay.
Yes.
In that case, does the entity invest in the no, Infosys does not invest in shares as their main business. So hence it will be going under investing activity. Clear?
Okay, sir.
Right. Now comes the next question. Other non-operating assets, example, financial asset, investment property. The question that you have to ask is, does this entity invest in these assets as a main business activity? Are your main business activities to invest in various financial assets? Then, if yes, then all your income out of these financial assets will be under operating activity. If not, it will be under investing category. Okay?
Okay, sir.
Any questions?
No, sir.
Okay. The last, not the least, the next topic is about cash and cash equivalents. Let us say you have huge surplus of cash. You cannot lie physical cash in your office building, right? You'll have to go and deposit in a bank or you'll have to do some kind of activity with it. When company has so much surplus cash, they might buy another business. They might expand their business by buying plant and machinery, correct? They might go and buy investment properties, lot of things. So if you have lot of cash and cash equivalents, the question that you will ask is, does the entity invest in financial asset as a main business activity? As I told you, Infosys has, let's say, surplus cash of 100 million. They went and deposited within HDFC Bank. Does Infosys invest in a financial asset as main business activity? No. Does the entity provide customers financing as customers to the main as main business activity? Does Infosys provide loans to people? Do Infosys provide loans to people, to customers as their main business activity?
No.
No. So which means whatever the interest Infosys earns from HDFC Bank, interest income, okay, let's assume 10%, which is $10, will be considered under investing category. Am I clear?
Okay, sir.
If the entity provides financing to customers as the main business category? If that answer is yes, then there are two further questions that we'll ask. Whether these cash and cash equivalents are related to providing financing to the customers. Let us assume that there is a bank. Okay. They had a cash surplus of 10 million. Okay. What did they do? They gave loan to customers. Okay. And the loan, the customers gave an interest of 10%. So which means $1 million. You got it as a income. Clear so far? Manat, clear so far?
Yes, sir. Yes, sir.
Yeah. So let's look at this. This is a cash and cash equivalent. $10 million is a cash and cash equivalent. Does the entity invest in financial assets as a main business activity? Okay.
Okay.
Let us assume that it is no for the time being. Okay. Just giving an example. So we'll ask the question. Does the entity providing financing to the customers as a main business activity? Yes, they do, right? They do. Correct? And is these cash and cash equivalent related to providing finance to customers? Yes. So what category it is? Operating category. Correct? Now, since this is a bank, HDFC Bank, their main business is to invest in financial assets, right? Example,
Yes.
what financial assets? Giving loan is a financial asset, right?
Oh, yes, sir. Loan, yes.
Yeah. So this will become
Deposit.
a operating activity. You
Okay.
understood?
Yes, sir. Yes. Sir,
Yes.
deposits, bank deposits will also come as the operating activity for banks, right?
Yes. Bank deposit is, however, a liability. So bank takes deposits from the customers. So you go and give a deposit to the bank, right? It is your cash that you're giving as deposit to the bank. Bank has to pay it back to you, no?
Yes, sir. Yes.
So that will become a liability. When bank gives a loan to you, that will be an asset for the company, for the bank.
Okay.
Okay, right?
Yes, sir.
Now comes the last point, which is if there is a cash and cash equivalence and the entity invests in financial assets as their main business activity, no. Does the entity providing financing to customers as a main business activity? Yes, they do. Is cash and cash equivalent unrelated to providing financing? Yes, it is unrelated. Then you are given a choice where
Okay.
you have an accounting policy to show it under investing category or operating category. Clear?
Okay. Okay.
Right? I will give you an example in this situation. Okay. I'll give you as an example in this situation. Right. And this is a real example again. Okay. But I'm not naming the entity or anything. Just let me just take it. Okay. Let us assume there is an company called as ABC Leasing Limited. Okay. ABC Leasing Limited. Now, what do they do is that they provide vehicle loans. Okay. So, which means their main business activity is providing financing to customers. Correct? Okay.
Okay.
Now, they have around dollar 10 million of surplus cash, which they have invested in short term deposits. Okay. Now, these deposits are not used for lending. Okay. They do not use this $10 million to give loans to customers. Okay, they are not linked. They are not linked to lease contracts. They are not linked to the lease contracts, and they are kept as a liquidity buffer, which means, see, they provide vehicle loans. No, let us
Yes.
assume they, when they provide vehicle loans, when someone does not pay back, they need to generate or they need to run their business, right?
Okay.
Correct. So let's assume that Manad, like you have started working, right? So let us say that you're going to office daily, right? You are, you have expenses. You have started to incur expenses. If the company does not pay you, you would have saved some money so that even if the company does not pay you, you have enough money to, uh, you know, survive, to eat, right?
Yes, sir.
So similarly, when a business is not generating money, they would have some kind of liquidity buffer so that they can survive till they generate in appropriate income. Okay,
Okay, sir.
right. Now let's assume they generated interest income, okay, in 1 year to the extent of uh, 1 year to the extent of dollar 500K.
Okay, sir.
Okay,
Okay.
right. Now here the question that we need to answer is that look at this chart. First and foremost, does the entity invest in financial asset as a main business activity? No. Why no? Because entity is not in the business of investing in shares or investing in bonds, etc. They, what do? They give loans to customers, correct? They give vehicle loans to customers, in fact. Am I right? They are not going and investing in mutual funds. They are not going and investing in shares. They are not going and buying bonds or debts, etc. Correct?
Okay.
Correct? They're not investing in financial assets, but they are giving loans. They're providing finance to people.
Okay, sir.
So the second question is, does the entity provide financing to customers? Yes, they do. Am I right? But are these related to providing financing to customers? Right? No, they are unrelated to providing finance. Right? These cash and cash inflows, the company ABC Limited generated these cash surplus by doing business for a long period of time, by giving loans to people, generating income, they kept aside. So they had a lot of cash flows now, correct?
Okay,
So
sir.
that excess cash flows, instead of giving loan to people, instead of giving further vehicle loan, what did they do? They went and deposited it bank. Am I right?
Oh, yes, sir.
And they are generating interest income. So did they
Oh,
generate interest income by giving further loans? No. No,
okay.
right? Right. So now they are given an accounting policy by choice. Right. They are given an accounting policy by choice. Why they are given this accounting policy by choice? See, this cash and cash equivalent, even though it is unrelated to the customers, tomorrow it can be, isn't it? What if their people are not giving the money back? They still have to generate income, right? Or profit. They will use their surplus cash flow and give it loans to other people who are going to give us back. Correct, no?
Okay, sir. Okay.
So hence they are given an accounting policy. And that policy allows you to recognize either in investing category or under operating category. Okay.
Okay, sir.
Okay. So hence, right, in this example, okay, um, in this example, the assets the entity has, which is a cash and cash equivalent. Okay. The question that we asked is, are they related to customer financing? Financing. What we said, no, it is
Oh,
not. Do you have a policy choice?
yes.
Yes. In this case, the category you can choose is either you can choose in investing or you can choose in
Operating.
operating activity. And
Okay.
this choice is given only to specific entities which are in the business of customer financing, like banks, loans, providing loans, etc.
Okay, sir.
Okay.
Okay.
Any questions?
No.
Okay. Okay. Are you clear about this particular chart?
Yes, sir.
Any questions in this?
No.
Okay. Are you having too much of information? Do you want me to break and continue tomorrow or day after, or you want to finish it off?
So we can finish it.
Okay, fine. The next category is called as financing act category. In financing category, mentions that IFRS 18 requires specific income and expenses from following liabilities to be included in financing category, where income and expenses, initial and subsequent measurement, incremental expenses, example, interest expense on debt instruments such as loans or bonds. So any interest expense you generate from the loans or bonds, any fair value gains or losses on liabilities which are designated at fair value through P&L, any dividends which are issued on shares which are classified as liabilities.
So it
What
is
are
more or less
those?
like the categories that we are reading. It's more or less like the ones we have do in cash flow statements.
Correct, similar to cash flow statements. You're right. So let me ask you a question here. What are the shares that will be classified as liabilities? What can be the shares which can be classified as a liability?
Preference shares.
Which shares?
Preference shares.
Preference shares. But what specific in preference shares? Redeemable preference shares. Am I right?
Okay.
Redeemable preference shares. Irredeemable preference shares are considered as an equity. Correct? So you're right. Redeemable preference shares will be considered as a liability. Right? Because they can be redeemed after a particular point in time and dividend are fixed. Correct?
Oh, sir.
So all these are financing expenditures or uh, finance liabilities. So hence we will classify them as income and expenses under the finance categories.
Okay.
Okay. There could be other liabilities as well. Example, interest expense on your trade payable. So if you don't pay the payable for a long time, then the interest on the trade payable.
Uh-huh. That will be financial.
Lease
These
liabilities,
like your contract liabilities.
contract liabilities like in IFRS 15,
Okay.
which will have a financing component. Like you have to pay interest if your contract liability is not settled for a long time.
Okay, sir.
Interest income or expense from a defined benefit plan. Unwinding
Okay.
of discount or the effect of changes in the
Discount
discount
rate.
rate of provision. All these are will be considered under the
Financing activities.
financing
That.
activities.
Okay.
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 So similar to investment activity, we have what we also have this flow chart. Okay.
Okay.
Any um, all financing liability related income or expenses. Any income or expenses you generated out of financing liability. Example, borrowings, bonds. All income and expenses out of that. The question we ask is, does the entity provide financing to customers as a main business activity? If the answer is no, then it will be under
Finance
financing
category.
category.
Okay.
Correct? But if the entity provides financing to the customers, then we have to ask whether these liabilities are related to providing financing to customers. Example. Okay. Example of this is, let us assume there is a bank. Okay. What does the bank do? Bank take deposits, isn't it?
Oh, yes, sir.
From customers, which
Oh,
and they give interest on deposits. Let's assume they give 8% interest. Okay. And they took
oh,
a deposit of, let's say, 100 million. So around
okay,
8 million is their interest expense.
okay, sir.
So around 8 million is their interest expense. Correct? And what do
Oh,
they do with the deposits? They give loans to customers. Correct? So this amount of deposit, the interest expense, correct? Right? Is it a financial liability? Is the deposit a financial liability? Yes.
yes,
Does the entity provide customers to the main business activity? Yes.
yes,
Are these deposits taken to provide financing to customers?
yes.
Yes. So it will be under
Operating category.
operating category. Okay, clear?
Okay, sir.
Now,
Yes,
if
sir.
the same bank, right? What did they do? The same bank, okay, okay, took a loan, took a loan, okay? They took a
Okay,
loan. Let us say they took a loan from RBI for their short-term liquidity,
okay,
correct? Or okay, forget about the loan. So forget about that. Let's say that they took a loan to construct, let us assume, a building,
okay,
right? So they took a loan from another bank, or they took a loan from RBI, etc. What not? They took a loan from to construct the building.
okay.
Now, so that they can house their property, plant, and equipment, right? So they can house their property, plant, and equipment. They house their employees to construct a building to house their employees.
Impress.
Okay, to house their employees. So,
Okay.
do they have a finance liability? A loan is a finance liability. Yes.
Yes.
Does the entity bank provides main business activity? Yes. But
Yes.
did they took the loan to provide finance to another customer? So did they took
No.
the loan and gave it to another person as a loan? No, right?
No.
So are these loans related liabilities providing financing to unrelated to providing financing? Yes. So which means
Yes.
you are given an accounting policy by choice to
Okay.
either show it under investing category, financing
Financial
category,
or
or
operating.
to show it under operating category. Okay.
Okay, sir.
Now the same bank took a loan from RBI. The same bank took a loan from RBI. Okay. Or they took a loan from another bank, which is called as interbank transactions. Why? Because they had liquidity concerns. They had liquidity issues. So
Okay.
they wanted this loan, and what did they do? They gave further loans to the customers.
And it
Or
will be operating activity.
yes, it will be an operating activity. Or they used this RBI loan and they gave it, they used it in their business to give interest to their depositors. Correct?
Okay.
So that will be again operating activity. Am I right?
Yes, sir.
Is it clear?
Yes, sir.
Yeah. Okay. Are we understood the differences?
Yes, sir.
Right. So I'll give you a summary of example. Okay. And then
Sir, can you send this standard
I
to
will
me,
send.
please?
Yeah. I will. So let us assume that there is an industry. Okay. Within this industry, let us assume there is a retailer. Example is Tesco supermarket. Okay. Then there is a bank, which is
Mhm.
HSBC. There is a tech company, which is an Apple.
Okay.
Right. What did they do? What was the type of liability? Okay. One is a bank overdraft. Okay. Which they took it for inventory. Okay. Are they
Okay.
providing customer financing?
No.
No. Or are they related to the customer financing? No.
No.
Correct. right? So
Yes.
the category will be financing category. Correct?
Okay.
Any questions?
No.
Okay. Let us take example of HSBC. They took
Mhm. Customer deposit.
customer deposits. Are they related to are they using this money to
Yes.
give people
Finance
loans?
customers. Yes.
Yes. So then this will be under
Operating category.
operating category. Correct? This company took a bond, right? Are they providing customer financing? No.
No.
Or are they related to customer financing? No. So again, this will be under
Financing.
financing activity, where
Okay.
any entity does not provide will go directly to the financing activity.
Oh,
Okay? Is it clear?
yes, sir.
Right. Any questions?
No.
Okay. There are few more topics which I will just one or two topics which I will just very quickly finish it off because I think that you have already understood the concepts. So I'll just quickly finish it off, which is also a main part, and
Okay.
then I will stop for the day. Okay.
Okay.
Now we discussed about operating category. Now the standard is giving specific guidance on analysis of operating expenses. Earlier, what used to happen is that all these expenses are clubbed according to some nature, some function. They are aggregated together without any proper structure. Okay. Now the
Mm,
standard says that you have three options. You can club the expenses either by
Right.
function, right? So function means cost of sales, distribution cost, admin expenses. So all the expenses like transport cost, packaging, sailing and distribution will be under distribution cost.
Okay.
Okay. All related to administration expenses like inventory, impairment, amortization, depreciation will be under
Administrative expenses.
administrative expenses.
Okay, sir.
You can also consider by nature, where you can show the transport costs, depreciation, employee cost, etc. Right?
Okay.
Which is by the nature of that expense. Or you can also show a mixed approach. You can show impairment expense, which is by nature, and
And
by
administrative
administration
expense,
expenses, which is by
which is by function.
function. That approach you can take.
Okay, sir.
However, standard also very clearly says that,
Sir, your screen is not visible.
I know. So standard also very clearly says, what they say is that whatever you do, okay, whatever approach you take, it has to be done in a consistent format, okay? And
Okay.
whenever you are aggregating, for example, you are aggregating by function, showing administrative expense as a single line item in P&L, right? The
Okay.
split, the breakup of this should be disclosed in the notes to financial statement. Okay,
Okay.
like what comprises
Okay.
of administrative expenses? What are the
Okay.
expenses that comprises of administrative expenses? Right?
Okay, sir.
So IFRS IAS 1 also had this, that they had to show the split in the or the breakup
Notes.
in the notes. But there was lot of aggregation and disaggregation problems that got
Okay.
rectified over here, where they made it much more clearer and cleaner.
Okay, sir.
Okay. If at all, let us assume they classified some of the expenses as administrative expenses, but no, those expenses should have been in investment expense. Then what happens? There is a reclassification error or a reclassification change, isn't it? That change is considered as an change in the accounting policy. Okay? Change in the accounting policy. In case of a change in the accounting policy, when one expense, earlier it was shown as one classification, in current year it is shown as another classification, even the prior year amount should be changed. Even the prior year amount should be changed. Okay.
Okay, sir.
And
Okay.
a note should be given called as reclassification change
Okay, sir.
within the notes to the financial
Financial statement.
statements. Okay. Because
Oh,
it is an accounting policy change.
oh,
Okay. Any questions?
no, sir.
Right. There are totals and subtotals, right? IFRS 18 has come up with new. Yeah, this last topic and then I'll stop it. Okay.
Okay. Okay.
Now there are various subtotals and totals. Now in this subtotals, right? What has happened, right? Um, the standard sets that the subtotals that must be presented are operating profit or loss, profit before finance and income tax expense, profit or loss. These subtotals have to be presented. But if there are certain companies wants to present additional subtotals, then it should be made up of amounts recognized or measured as per the relevant
IFRS
accounting
accounting
standards.
standard.
Second, it should be compatible with the structure and should provide useful. It should be useful for the people. Okay, it should be useful for the people, and it should be consistent from the last period to the current period. It should be consistent,
Okay.
and it should not be given more importance compared to the total subtotals given as per IFRS 18, which means you gave a new subtotal, and that subtotal you should not give more importance compared to this subtotal which are already required as per IFRS 18. Am I clear?
Oh, yes, sir. Yes, sir.
Apart from these subtotals, certain companies also use additional subtotals. One subtotal is gross profit or loss, operating profit before depreciation, impairment, and amortization. This is a subtotal which are very well used by various investors because investors, before they invest in shares of a company, they look at the operating profit before in depreciation and amortization so that they can take a decision that what is the company making out of its day-to-day operations,
Uh, okay.
right? They can also include subtotals like profit before income and tax, profit from continuing operations. These are right. These are according to their according to their requirement. And the standard also gives us something called as MPMs, which are management defined measure performance measures, right?
Okay.
Right. And according to that management defined performance measures, these MPMs, which we will learn in chapter 18, are a new standard. Like earlier, we used to have management commentary. Okay, as per IS1. Now we have management defined performance measures where the company have to give performance measures which are required as a disclosure.
Okay.
Okay, and these are not which are mentioned in this these subtotals are not mentioned in the MPMs, but rather commonly used by organizations. That's it.
Okay,
Is
sir.
it clear?
Sir.
Okay, right. So these are the major change that has happened to IFRS 18 with respect to the statement of profit or loss. Rest of them almost remains the same. Okay, rest of them almost remains the same. They're also talking about the roles of financial statement as we know what they are. They're also talking about aggregation and disaggregation. That expenses should be aggregated only according if they have a similar characteristics or should be aggregated according to their nature, etc. Right? And they're also talking whatever that has there in previously in IAS 1 continues either through IFRS 18 or through other relevant standards, which we will learn in the future chapters. Okay. Also, they are giving classification differences between current and non-current liability, which we have already got the guidance as per IAS 1. They have further given much more importance and given specific guidance in relation to IFRS 18, right?
Okay, sir.
Right? And how they will test it in SBR is that we don't know yet because there is an ambiguity. There could be cases that they will give you a wrong classification error by a company. You might be advised to show the correct treatment. They might ask you directly what is an operating category, what is an investing category, give examples, etc. Or they might give you a scenario and ask you to conclude whether it is investing category or operating category. So there are multiple types of questions that could be tested. Unfortunately, we don't have that yet because it is the first time that it's going to be get tested. So it is very important that you read through this particular standard in detail, understand this, and get an idea and a clear picture and be ready for further questions that you might expect.
Okay,
Okay.
okay, sir.
All right. So these are the primary changes. Rest of them remains predominantly same. I'm not going through them in detail. Even you can take a look into this materiality concept, etc. You can also read ACCA Study Hub, which gives a detailed explanation about this standard.
Sir, is this being updated in FCCA study or no?
Yes, they are.
Okay.
Okay. So you can take a look at them and go through them. I will also share my material